Welcome traders to another Tick Mill trading update with me, Patrick Munnelly. Want to update the US indices view as we wrap up the week here and look at some potential trade levels for Friday's session. At the start of the week, we were looking for a three-wave corrective move into this 50-70, 50-60 area. Got that move and tested it a few times and got some nice bounces there. Yesterday, obviously, month end, we saw some pretty choppy price action in the main indices heading into the close of the month. As we start the new month now, today specifically, what we're looking at, whilst we maintain support here into the 50.89, 50.90 level, see the potential for a breach of the prior highs at 51.23 to target our 51.67, 51.69. We have weekly projected range resistance just above there at 51.90s. But the area I'd be paying attention to is this 51.60, 51.70 area, as I mentioned at the beginning of the week. And certainly, whilst we maintain momentum divergence, that'll be an area I'll be paying attention to play a counter trend short there for a retest of certainly of the 51.20s as potential support. The alternative scenario is that we fail to hold the 50.89, 50.90 level. That would see us back down testing our support zone again, 50.60 to 50.70. Now, if certainly heading into the close today, and with quite a lot of event risk next week, if selling does pick up, if people are looking to book profits ahead of that, ahead of next week, then any loss of the 50 level will be a bearish development. And certainly we can think then, or start to think about a move to retest the 5,000 level, 49.90 to the downside. But for now, whilst we hold the 50.90, ultimately looking for a break of prior highs and on to get a test of that 51.60, 51.70 area. Moving to the Nasdaq, similar scenario here. We were looking for a three-wave corrective move to test into the 17,839, 17,070 level. Got that yesterday and saw a pretty decent reaction there in the Nasdaq. We have taken out prior highs, not on a closing, just shy of doing so on a closing basis. But for today's session, what I will be watching for is this trend line support here coming in at the 17,900 area. Watch for that area to hold. Bullish reversal patterns there sets the upside objective for the 18,350 zone. Got a cluster of targets there, fib extensions, and the weekly R1 coming in just below 18,300. Again, watch for momentum divergence to be maintained, bearish reversal patterns there, and certainly there's a counter trend trade to play for a retest of these prior highs to potentially act as support back into the 18,100 zone. The alternative scenario obviously is that we lose this trend line support at the 17,900. That would have us back down testing the 17,800 level, and similar to the view with respect to the S&P there. If we do see some risk being taken off the table into next week, then we can think about a deeper move into the high volume area here at 17,700 on the downside. But for now, focus remains on a test of this 18,350 zone. Wrapping up with the Dow Jones, the weaker of the indices. Notes that on that weekly time frame, we had come just shy of testing the 39,400 quality objective, and we have seen some weakness in the Dow Jones. We took out the weekly bull bear zone at the 38,900s. Did find support into 38,800 and the value area, just ahead of the value area high here on the 4-hour profile. But for me at the moment, whilst we maintain 39,120 as resistance, we look for a test of the trend line support and the value area high at 38,690. Now from there, obviously, watch for bullish reversal patterns for an opportunity to trade to the long side. Certainly, we look for a test of the corrective trend channel back into that weekly bull bear area at 39,000. If we get through there, then we have our targets on the upside at 39,500, 39,600. Any loss of the trendline support, the next downside objective will be the quality objective at 38,560s. From there, we could once again try and mount an attack on the prior cycle highs. But if we lose that support zone, then we're certainly going to be thinking about a move into 38,400 and maybe a much deeper move into test support back down to 38,100. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next week, thanks very much.